right. What's going on? What's going on? It's your host, your founder, your your influencer, the guy. Basically, this is me. Levon Stewart, founder of Vonnie Effects. Today we're gonna do another episode of Take Profit Tuesdays. And as always, guys, definitely we're gonna definitely get to some disclosures. If you didn't watch the disclosure in the beginning, again, if you're not involved in the financial markets, if you're new to this, if you have no experience, if you do want to get into this and learn something, or, well, actually, if you want to not really learn something and still get into this without any ease, but, just watch the gains gain and watch the losses lose and not any reason why, please find your local advisor. Also, it's called money managers. These are the ones that are working for firms who take your thousands of tens of thousands, if not hundreds of thousands, if not millions of dollars, and manage that money for you. Will get you some interest. If not, if you're pulling out at the wrong time, you will definitely lose money. Without that being said, these people are licensed in Series 6, 9, 69, all those licensing. Those companies, they're also regulated by the FIRNA, SEC, and other regulatory companies. So those are going to be the guys you're going to be paying, because a lot of times how they get paid is when they manage your money. So they're going to be collecting a commission. On this channel now, we teach you how to invest. We show you the simple steps, the procedures, how to really understand what's going on and why things are doing the things it does, and it just brings what I call financial freedom. So my job is to educate the masses and to educate you guys, if not free. If not free, if you want to meet me one on one via Zoom, we could do that, set something up. We also have crypto account management. We also have a signal service. So if you guys want to take involved into any of those things, please send me a message, either on the YouTube or an email. It's gonna be stuart.levon@gmail, or you could do VonnieFXLLC@gmail.com. Those are gonna be the two places you're gonna reach me. So let's jump right into it. So from last week, guys, and again, this we used to do the streams, but you know how technology works sometimes. I'll go for a little tangent, right? So they say every 4 years, technology almost increases exponentially, right? So whatever you're learning today, square it, and then after that, square it again, and then so on and so forth every 4 years. So this means as technology is getting more and more advanced, it's a lot of times, I'm starting to learn this as I get older too. I'm very simple, right? I don't really go out buy electronics like that, kind of keep to myself, so on and so third. So a lot of times when I'm doing these streams, I'm learning from someone else, and I'm using technology from when I was in college, right? We don't need to get into the years and stuff, but to make the story short, the streams might come up in the future. I'm not entirely sure when, but for right now, guys, I'm doing my best to upload these videos at least weekly. Working hard as far as figuring out to get this course going. That's gonna take some time. And yeah, I appreciate you guys, for those who actually watch these videos, that actually learn something, that you're gonna make a lot of money. If you take this seriously with all the pillars, and we talked about it. And again, I'm going to talk about it again in the future about the pillars. Because we need to master these strategies. We need to learn how to be savvy investors without any ease, worry. When things crash, we jump in. When things go out, we get out. Right? We always want to end in the green. So with that being said, please support the channel. Make sure you like, make sure you comment, make sure you subscribe, and get with me in the email, and let's set something up, so we could make a lot of money together. So real quick, we'll go over what we see with our trading account. So again, guys, if this is your first time joining, we're doing our best to grow an account to where you could do option trading, right? all these price tags were bought in. From last week, we were like right around here. And then the Fed came out with some news, which I haven't talked in a while. The Fed, they've been somewhat relaxing with the interest rates, I suppose, which I'll definitely talk about in a couple minutes. Um, yeah, so from last week, we were kind of like around right here. I predicted, guys, and I have to give myself credit because what I do every week, it's not easy. It takes, well, I'll tell you one thing. It takes that psychology, man. It takes that patience. It's that psychology of patience that really gets me going because, without the four pillars, some of us would already pulled out probably when we touched that deep zone, the bottom. That I don't know if you guys can see those arrows, but right at the very bottom, a lot of us thought the market would crash. A lot of us thought it would crash even worse when it double bottom. But like me, I'm a savvy investor. I jumped in again, right? And I'm still holding. So, and I'll disclose how much profit we're in. If you guys are in this together. Let's see. One second. Hang tight, guys. I'm doing this live on the stream. Well, not stream, but we're recording this because, again, like I said, we're trying our best. So, we put in a total of... Oh, today was a good day, by the way. We got up... Hold on. Just gotta double check something. Hold on. Let's see. So yeah, if right now we had a really good day, right? So we went up $3, which is phenomenal, right? So right now the initial investment was $275, right? Yes, I'm disclosing it. I don't care. You guys could come at me. I don't care, right? So right now we're at $292.49. That's almost. So I'm gonna do the math. Let's see. That's $17, right? $17, guys, and we have not yet reached the initial all-time high that we got into, and we're doing great, man. We're doing great. I can't complain. Those of you who have invested more than I have, hey, you're making even more money than me. On top of that, we've been collecting dividends, so it's a win-win all around, man. I really can't complain. I really can't complain. I'm actually really excited, and it's for those of you who are not involved. I wish you were. You should have gotten to when we get in, but guess what? It's not too late. It's not too late. Actually, it's never too late. But I'll definitely get in at times that I'm getting in. If you're not getting it at the times I'm getting in, start saving up some money, start building up capital, and then when it's time to jump in, guys, and get in when I get in. If not, hey, get with me. I'll teach you the basics. And if not, you guys want to learn more, we'll set something up to learn more. But hey, we're doing our thing. So as far as next step goes now, guys, I'm just chilling. I'm not gonna prices somewhat rallying, right? It's kind of doing its thing. And again, in a couple of minutes, I'm about to get into the Fed news, so we could talk a little bit more. And yeah, then we're gonna wrap it up. So, like I said, as of right now, we're just gonna wait. We're gonna probably wait for another sell-off. Is it happening soon? I'm not sure. Next week, next month, I'm not sure. But I'll tell you what I'm gonna do. I'm gonna definitely have some money set aside to, put some more money in. Until then, we just enjoy the ride. So, next topic. And shout out to Jennifer Schossenberger. She wrote an article. Federal Reserve raises interest rates another 0.25% or 25 basis points, right? To the highest since October 2007. So, she writes, the Federal Reserve raised short-term interest rates Wednesday by the quarter percentage point, bringing it back to benchmark rates range to a new 4.5 and 4.75, the highest level since October '07. So what's interesting about this is that, again, I haven't really been talking about these rates recently because they haven't been really doing much. And I think I could find a chart somewhere around here, or maybe not. But either wait, is it this? Let's see. Yeah. So this is upper bound. Yeah, so this is kind of like what we're looking at as far as the Fed rates. So yeah, so as far as and let's get back into the article. So in his statement on Wednesday, the central bank acknowledged the slowdown in inflation as the Fed continues to assess the impact of its interest rate hikes have had in consumer prices over the year, right? The 25 basis point hike marks further slowdown in the Fed's pace of rate increases after the Fed raises rates by 50% basis points in December. So again, I didn't really talk about that, but they did raise basis points in December and 75 points each of its four meetings from June to November, right? The fastest clip since 1980. So think of it like this, guys. And they said this last year around this time, and again, this probably be like a 1 year anniversary to the Take Profit Tuesdays. Shout outs to whoever is watching this, but they've been increasing hike. Well, they've been jumping the rates because inflation happened around 2020, around 2021. So the Feds have been well aware of what's going on. They've been all hands on deck basically to combat this inflation. So what they did was, but start around the February last year, around this time, or March or whatever, they were increasing basis points by 50, 75, 75, 50, 75, 50. And that aggressively raised rates up, So a lot of markets that were infected by this is obviously the lending side, like banks, like loans, personal loans, credit cards, auto loans, mortgages. Those rates to lend money to buy those assets increased dramatically. So again, if you were not able to get one of those assets via loan wise or bank loan, you are paying a hefty price now just for that loan, that money you're borrowing. So the rates on that is astronomically high. So just to continue, oh yeah, and as of right now too, there it's 25%, 25 basis points. So they're not really increasing it as much now, but from what I'm hearing and probably getting into it too, they're gonna continue to increase rates. So the Fed officials acknowledged in Wednesday statement, inflation has eased somewhat but remained elevated. The Fed no longer noted Russian war in Ukraine as contributing upward pressure on inflation, but said this conflict is contributing to elevated global uncertainty. So that is 100% correct. And just by that statement right there, inflation has eased somewhat, but it's elevated. So what does that mean? So last year we used to pay what? Let's say $1 for a gallon of milk, right? Due to inflation now it raised up to $1.25, $1.50, $1.75, $2, right? So right now it's kind of like around $2, $2.10, $2.05. So inflation is still high. But guess what? It's elevated. So that doesn't mean they're going to stop trying to bring it down. A lot of people saying this is going to be our new price floor, from what I hear. But we have to see. And they're also saying they don't think the war is the contributing factor to this. Because if you haven't seen on the news, they're still talking about the war, but not as much. And they're, taking some time to combat the war and whatnot. So that's another thing. And then, just to end things off, because we're already going on 15 minutes, I don't want to talk too much. Speaking in a press conference on Wednesday, Fed Chair Jerome Powell was somewhat more optimistic on the outlook for inflation, saying we can now say for the first time that this inflationary process has started. So it's good news. It's a lot of good news. And I was watching briefly about Jerome Powell talking to the press about it, and it's kind of what I expected. They're not gonna stop increasing the rates. They're gonna continue because he was saying that he didn't want it to be very volatile as far as deflationary stuff. So if things drop too much, people might start buying again. Excuse me. People might start buying again to where things are gonna skyrocket even more, which might affect the supply chain. This, that, and that. And he really emphasized certain sectors that were gonna be impacted by this, and one of them was the housing market, of course, because people need somewhere to live. And that's gonna be, I guess, the caveat to what's going on, because the main staple point of what our lending is in the states, at least on this side of the lending part, is housing. And a lot of people get their housing through mortgages, so they're only able to purchase properties through banks with the mortgages. So if rates eventually go down significantly, we may see increase in sales, home sales. But as of right now, I would definitely say things have slowed down, and yeah, we definitely have to wait to see how things play off. So definitely stay tuned. I'll definitely see you guys next week. And yes, I know I'm late. I know I'm a day late, so it's had a lot of things going on. And if anything, guys, I'll catch you next week Tuesday. Hopefully we get a stream going. If not, hey, we'll talk about it. But I'll catch you guys on the flip side. Peace.